David, you were talking about it, but prior to today's news, there was a lot of buzz in the ETF world about international investing. Todd, I'm going to come back to you. VettaFi, just a few days ago, you're citing that one of the year's most popular equity funds was the Vanguard Total International Stock ETF, the ticker's VX US. Net gains of about $5.5 billion. However, that same article also pointed out that equates to just under a tenth of the asset influx into Vanguard's S&P ETF, the VOO. So is international now back on the sidelines in your opinion, Todd? We know what David thinks. He thinks you need to look for international for opportunities. But what about you, Todd? How are you seeing it?
Well, the flows have certainly been favoring U.S. equities. Investors have been buying the dip, and today they're being rewarded. And you're right, Vanguard 500 is approaching $60 billion in net inflows just this year. That could blow away the record that it set just a year beforehand. But we are seeing investors start to embrace international strategies. You mentioned VX US being one of those more popular ones. There are the benefits of diversification. We haven't fully seen it, but I think this trade deal or this pause could help to inspire people to diversify outside the United States.
All right. So, David, while we're talking about diversifying away from the United States, what about China specifically now? Obviously, the other side of these trade talks in Switzerland over the weekend, and also the tariff rate for goods going into China also lowered.
I think there's only one way to really perceive what happened, and that's as a positive. So another cloud removed, but the fact of the matter remains that there's a ton of uncertainty out there. So when you think about all the uncertainty out there and you start to think about markets like China, which is stimulating and they're stimulating aggressively, you start to think about places like India, which is one of the best growth stories we think out there, maybe China 20 years ago. You start to look at some of these emerging markets and there's a lot of things that look interesting there. So having exposure to China makes sense. Having exposure to India makes sense. We're also not anti-United States. We're just saying that if you're predominantly invested in the United States, you probably want to diversify outside as well.
Todd, your thoughts on China?
Yeah, we've seen strong interest in China ETFs in the beginning of the year that faded. KWEB is the Crane Shares China Internet ETF. It's still the largest of those China-focused ETFs, the more growth-oriented companies. Those are less likely to be negatively impacted by whatever happens from tariffs because it's a China-only story as opposed to a diversification and multinational, the way that some of the other Chinese companies are. KWEB is one of those ETFs worth taking a closer look at in this environment.
All right, David, I want to come back over to you. You mentioned India just a short time ago. You previously talked about India being one of the most compelling structural growth stories in the market, also noting the recent India correction as a buying opportunity. One ETF that we track here at CNBC is the INDA. I'm looking at it pretty much flat year to date, up about 1.5%, but really mostly moving sideways throughout the year. Is that the way you would play India right now, or are there some other ETFs you would look at?
Yeah, so we don't. First off, I guess big picture, just on the India structural growth story. You've got huge population, tech savvy, well educated, and you've got a government supporting that. So we think everything lines up there for the growth story. And that correction is exactly a buying opportunity. So that's generally where we think about it from a structural perspective. We offer a couple different ETFs. DGIN is one of them. So I'll throw that one out to you.
All right, so we're actually looking at some of them right now. The Indian ETFs, or the ETFs that track Indian equities, definitely moving up higher right now. Looking at a number of them right now, the one you mentioned, DGIN, up over 5%.